Hello and welcome to epiosde.com. My name is Amol Dethe and you're watching FinTech Diary. Generally in the FinTech Diary, we do speak to a lot of startup fintechs or the young fintechs and try to understand how they are looking at India, how are they looking at innovative business solutions and how are they building new solutions specifically, for how are they solving the major problems in the country. We hardly speak with the company which is actually a regulated entity. In rare cases, we do that because to get a different perspective. And today I have with me Sanjay Sharma, the Managing Director of iFinance, who's going to tell us about a next step ahead of fintechs, how a regulated entities are operating in this space. Sanjay, glad to have you.
Thank you, Amol, and thank you for having me on this program. Yes, you're right that often when I also speak at events, people are surprised to see that someone with so much experience is talking about new areas and new areas of inclusion and fintech.
Right.
But iFinance, which I head,
Yes.
is a company that started off about 8 years back, but it has done many things which are cutting edge in fintech, and many things which are classical and where we do business in a classical way.
Sure.
If I was to talk about the business, Amol, the company provides inclusion to the micro enterprises and the tiny scale businesses that for years have not had any funds made available to them by banks or by NBFCs.
Right.
And that's a very big challenge because that's a problem where 6 crore such enterprises do not get any funds. And I think unless they get funds and they can move up the scale in terms of economics, India is going to stay a developing world forever.
Right.
So it's important to solve this problem, and iFinance is trying or attempting to solve that.
Sure. So obviously you gave a brief introduction about it and how it is working. But Sanjay, now you are operating in this space really long. The kinds of fintechs that I have into it are very new, maybe came into emergence hardly 3 to 4 years back, partnering with banks and large NBFCs. Maybe few of them must be partnering with you as well and working as an aggregator. But since you're operating in this space since really long, I would like you to tell us how has been the difference for you? What kind of difference have you created? And more importantly, what are your learnings? The vision that you started with, that you will finance the unserved or underserved SMEs or the small businesses. Did you manage to serve them the way you wanted, and what kind of difference did you create there?
Sure. I think a simple answer to that is that what I started off thinking that we will create a dent into the problem of non-availability of credit to micro enterprises, I think we've done better than my dream.
Okay.
And primarily because I think technology is a huge strength,
Right.
which I think we can't underestimate. The availability of technology has helped us quickly ramp up. Over the period of 8 years, we have given loans to more than 500,000 enterprises. And when I say that, I'm very pleased because I would have been happy with probably half that number.
Right.
Today we have active customer base of more than 250,000 enterprises, and you can see that that when you give loans to 500,000 enterprises, even if you multiply it by the number of employees each one has, maybe by a factor of 4, plus their families and their households, we are talking of a fairly large imprint that is being created through the services that iFinance brings to them.
Right. Sure. So give me some basic information in terms of the operating model initially. You always started to work as an NBFC, or you started working as maybe a fintech company initially? How was the difference after, if you started like that,
Sure.
after getting a license from RBI specifically as an NBFC entity?
We started our journey as an NBFC. So we took a license and we started off with a model, and our model is a phygital model, if I may say. It uses the positives of a high touch as well as a high tech approach. While the customer that we talk of, which is the micro enterprise, which is unorganized, these customers are unlikely to come directly onto a digital platform.
Right.
And therefore, one has to have branches where our loan officers can go and meet them. But after that, it's a completely paperless process. So we don't have applications, etc. And then it becomes a completely fintech-like process where the data from the customer is directly uploaded to our server. KYCs are done electronically, validation of data is done electronically, and even the underwriting is done to a large extent using cluster-based financing models and data science. So we've started the journey with saying that that the customer has to be approached face to face. As we gone on, we become more and more technology driven. The first 2 years we actually used to have application forms, paper application forms. Now we don't have. Now a lot of that data that we get is analyzed using data science, and we have a full-fledged data science team. So we have evolved, and I think the market is very dynamic. That fintech market, every day something changes.
Right.
So there's always that catch-up to say that to stay relevant, you have to catch up and you got to keep running. We've learned that. We've done well in our space. In the space of lending to micro enterprises, we believe we are among the largest in the country. And I think the work is not done at all. I think we are far from saying that we have done enough. So I think the next 5 to 10 years is going to be a very very exciting time.
Right.
And we believe that we'll at least contribute to the way the fintech and the lending to excluded segment evolves.
So largest in which numbers? Do you want to say in the volumes or reaching the number of customers or disbursing loans?
I would say that it is the volume I'm talking about. Number of customers is what we're talking of.
Okay.
Because here the ticket size are small.
Right.
So obviously the amounts will not translate into very large numbers. But number of customers, I think the fact that we have touched 500,000 loans is a substantial number.
Agree. So how has been the situation now? We are almost we are going to enter into the new year very, very soon. The year has closed with a great credit growth. That's what the bankers are saying, which was never there in last decade. But on the other side, the interest rates are also very high. So how do you see the current situation? Is the demand still very high from the SME side or small businesses side?
Absolutely. The demand from the micro SMEs has bounced back. And that is wonderful because after having a disruption like COVID, people have still got the confidence to go ahead and build their businesses, to grow their businesses.
Right.
We are beginning to see tremendous growth in the last few months. This year has been an extremely good year. And I think the numbers that we are at least looking at is a 50% plus growth in this year. So that's a very big jump from how things were 2 years back.
Right.
I think we've forgotten the depressing times that the disruption brought. And I think life has started anew for many businesses. Also, the good news is that many of them have survived this disruption without having severe impact on their businesses. So I think this year and the years coming ahead are going to be good. On the interest rate you mentioned, you asked, Amol, interest rate has gone up.
Right.
But for the businesses that we lend to, interest is not really a very sensitive parameter on which they decide on whether to take loans. I think availability of loan is very important, and availability of the right amount of loan is important. I think those are the two parameters that they judge us by, and we have done well by those parameters.
Right. Maybe the SMEs generally, because they have not so many options to borrow from, may for them perhaps obtaining loan on a time is more important than the rate of interest.
Yes.
But for you, the cost of funding, the cost of borrowing, has it gone up for you? Because it's more than 2% now.
Yeah. See, the cost of borrowing has changed, and even we have seen about 50 to 70 basis point increase in our incremental borrowings. But at the same time, we are very fortunate that when we were much smaller 2 years back, we had taken loans and we had borrowed at much higher rates. Those loans have fallen due now. And those loans, when we renew, they actually renew at a lower rate. Although by current standards, they're 70 basis points higher than what it was 6 months back. So our cost of borrowing actually has remained the same. It has not changed. I think this is unique because we have been growing, and when I look at 3 years back, we were much smaller. So I think naturally the rates were not what we are getting now.
Right.
So overall rates have remained the same, but yes, I think I expect that in the coming months we will probably see further increase in rates. I think RBI has recently announced a 35 basis increase. So I think we are not over that cycle of rate increases.
Right. So give me some analysis here in terms of borrowing. What are your major source of borrowing? Obviously, regulatory body is one area, but what are your major sources specifically for borrowing? And considering, that the rates will go up, perhaps not significantly, but they will go up in near future, maybe at least for next 1 quarter. That's what the indication that we got from RBI. Do you see, the interest rate will also go up, and perhaps, the demand may curtail?
See, the sources of deposit or sources of borrowing that you asked, we have a multitude of products under which we borrow. So we have term loans also from banks, we have OD limits. We also have securitization, so we have NCDs, etc. Both PTC and DA is done. We have recently tied into a co-lending arrangement, which I think is going to become fairly popular in the coming times.
Yes.
We have ECBs also,
Yes.
and we have a lot of DFIs also lending to us. We have seen that many people are willing to lend to us because we have maintained good economic performance. We have been profitable. We have made sure that our delinquency stays in check. So those things do help. Going forward, how do I see the interest rates playing? As I said, that interest rates probably will increase. I think we would probably like to absorb some part of that increase through our efficiencies and economies. As we are growing larger, we're becoming more and more efficient. As we are using technology better, the economies are coming in, and I think we can pass on that economy to the customer at this point.
Okay.
So my answer would be that I don't think that from here onward we will see, we would like to offer to make our customers pay a higher rate of interest.
Okay.
But hopefully economies will help us, and hopefully when times turn and when the interest rates start coming down, we will hopefully will reduce our interest rates to our customers.
Okay. So let's hope that. Let me shoot one more question here specifically on the delinquency side, on the background of the demand and the loans. So during the pandemic, obviously government asked banks to infuse a lot of money specifically to the SMEs. They also kind of give a guarantee of ECLGS schemes. But do you see, because in my observation or maybe the conversation with the bankers or the financial heads, there is a worry that those loans may turn bad. By any chance, are there some of the loans that are there? I mean, have you given loans to such categories? Are you worried about it? And overall in the industry, what kind of delinquencies do you see specifically in this ECLGS category?
The way to look at it, I think, is that either we can call it glass half full or glass half empty. At the time when the times were bad, the pandemic was at its peak, the big challenge was that how to make sure that the SMEs or the micro SMEs, how will they survive? And at that point, many people thought that majority of these would not survive. So it was very important to come and support them. The government decided to use ECLGS as a support mechanism where they guaranteed the loans. And today, when we look at that, yes, the delinquency in the ECLGS loans is higher than the normal loans, because the normal loans have all settled down, customers have started off on their business. ECLGS is seeing a slightly higher percentage of delinquency. But wasn't that the actual reason why those loans were given? Because the government wanted to step in and take some part of that pain. So that's why I say it's glass half full, because that means it has really worked.
Right.
So I don't think the government ever thought that they would not end up paying any sort of guarantee amount. But I think the amount that they're paying is not busting their budget, so to speak. So my view is that ECLGS has worked well. It was a good program. Today we are seeing a higher delinquency in ECLGS, but it is not so dramatically high that one would say that it was a failure.
Sure. So now, considering digital has created a kind of a revolution in the country and specifically in the BFSI sector, financial institutions, banks, or specifically lenders are far more aggressively tapping the digital space, and many fintechs are using digital lending as one of the important, layer to lend to the categories where you are already been, lending to. How do you see this competition? Because every fintech is operating in digital lending space now, almost every fintech. And second is, they are also going to cater to all these segments, MFI, SMEs, or the new entrepreneurs or SMBs, something like this. How do you see that?
See, I think this competition in some ways was expected, and I think the fact that we have a very strong digital engine ourselves is partly to negate that competitive threat. Having said that, the market for micro SMEs which are excluded is very large. There are 6 crore such enterprises. We have given loans to, total loans that we are going is 500,000. So we have not even scratched the surface, so to speak. Not even 1%, I would say. So the market is very large. I think new players can come, and I think it will lead to expansion of the market. So I think that is one perspective. The second is that we should still be competitive, and that I believe that iFinance we are. And I think our connect with the customer is a very big positive, because being digital as well as the physical play, we meet our customers. Our customers feel very comforted by the service that we provide them. We have a very high NPS percentage when we survey customers for their satisfaction. And these are pieces that cannot be replicated easily. So my sense is that I think digital players will come in, the market will expand. We believe that we are competitive enough to hold our own steam, and I think there's a lot of learning from good competition. You know, when you have strong competitors, that's when you learn the most.
Right. So when we speak about the competition and specifically learnings, I would like you to tell us in terms of what has really worked for you. Has the repeat customers, you know, where you lent them, offered them a great service, came back to you again and again, that worked for you? Or the strategy where you could, you know, chase new customers, you know, that worked for you?
I think I would say it's the first. That is, the existing customers who come to us repeatedly is a very big strength that we have. And I think will continue to remain a strength for us. New customers sourcing is obviously something that we are good at. We source a lot of loans every month. But the fact that you have customers who are satisfied, who want to come back to you, is a very big plus. It helps you save on originating cost, and it also helps you keep your portfolio clean. So I think we have that head start over many, and that should be a positive competitive strength for us.
Right. So maybe to curtail delinquencies or to reach out to large number of people or taking a bigger risk, how has that whole 80-20, the co-lending model, worked for you? I'm sure you must be having a lot of partnerships with the banks and all.
See, we see a very low loss rate or very low gross NPA rate. Our gross NPA rates on the portfolios that we are co-lending on are below 2%. So it's a very low loss rate we are talking about. Obviously, with that, the bank partner is also very, very happy, because they have factored in close to 3 or 4% of loss. When they see only 2%, it goes into their pocket, which is good. So I think it's very important to build that confidence when you co-lend. Banks will take some time to trust the NBFCs in terms of how they lend. And NBFCs have to be patient, because it does take some time to develop partnerships.
Right.
And I think many companies like us, ours have made that first step. And what I hear is the co-lending portfolios are doing quite well.
You already answered one part of the competition with the fintechs. But you know, every fintech now is emerging and operating in the digital lending space, because they realize that lending is the only way where they can make money. How do you see, you know, the whole digital lending fintechs? Because at one side, the regulator have also awoken and they kind of whipped them, the kind of activities which happened very recently. So the understanding here is regulator will go really high against you know, irregularities into digital lending space, and the fintechs will have to obey all these things. On the other side, the regulated entities like NBFCs, I mean you or maybe banks, will also kind of try to put them under control. So how do you see the fintechs henceforth now, after maybe?
I think the way I see it is that this is the time for the fintechs to mature or grow up. RBI is still very supportive of innovation. I think all their utterances in the press, etc., show that support is there. But they want some regulation, some sense on that business. And I'm very happy that they come out with the digital lending regulation, which puts all the NBFCs, all the banks, and all the fintechs on the same level playing field. It's very important that they also follow the same regulation that others do.
Right.
It also helps in making sure that the customer data is protected, customer privacy is not breached. And these are the the hygiene factor that business needs.
Right.
So far, many fintechs were not bothered about those compliances, but they should be. The better fintechs were already complying with many of them. The ones that were not are going to face a problem. So one is that it has leveled the playing field. It's not tilted the field against the fintechs. It's not that they are at a disadvantage. But now everyone can play on the same base. Fintechs will, I'm sure, I have no doubt that they are smart enough and they will grow over these challenges, and they will become better. They will come out stronger and comply after these compliances. And it also ensures that the long-term stability of the digital business is there. Otherwise, we would have had some problems in the middle, some customer issues would have propped up.
Right.
At least RBI has moved early and made sure that those don't happen. So I overall look at that regulation as a very positive regulation. It has all the right elements in it. It allows fintechs to do business. It does not prohibit from doing business. If they want to use the NBFC route, they can apply for an NBFC license. If they don't apply for an NBFC license, they can still operate like a LSP. So there's an option for them.
Yes.
So options are there, yes, but you have to comply with some of the rules.
Okay. So do you see now, the number of fintechs will come down? Do you see now there will be a lot of, sensible fintechs will only go ahead and in this business, because somehow the whole idea of becoming an aggregator or an originator, will also not be as easy as they were, going ahead?
I have a different view there. My view is that yes, some of the not so serious digital players may decide that we don't want to go ahead because there are regulations. But I think with the regulation, I think many more good enterprises will come. And so I think that the numbers will only multiply.
Right.
When you put regulations, no one shies away from the fact that, let's not have business. When you have regulation, more and more companies follow the regulation because there is a clear guided path. You're not competing against someone who doesn't follow regulation, and therefore you are at a disadvantage. So my sense is the number of fintechs will increase.
Right.
I think India is, if I look ahead, probably going to be one of the classic examples or a case study of how digital business can transform a country.
Right.
And I believe that will happen in the next 5 years.
Okay. So again, next 5 years, I'm sure that will happen. But let me take a little, a smaller view from you itself. So how do you see the whole fintech space in next 2 years? Considering why I'm asking you this question is, you obviously clearly answered and partly answered about the digital lending side. But on one side, obviously the regulations are going high. On the other side, investors are also going a little serious about it. It's not that the investors are absolutely there with the red carpet. In fact, many of them have folded the red carpet, and most of the fintechs are also struggling in their, seed A and seed B funding also. So given these backgrounds, how do you see the fintechs specifically in 2 years?
See, I think in 2 years, one is that you will see a lot more cooperation instead of competition between banks, fintechs, and NBFCs. So the ground has been laid, and I think that is only going to grow. Second is that, yes, I think you have to be a quality fintech to really raise money at this point. As success has come in, investors will again become very positive about this industry. So I think it's a passing phase. In another year, 2 years, I think you will start seeing a lot of interest back into the fintechs. So I think these are the two things. I feel that there'll be quality fintechs, there'll be more number of fintechs, their impact on the country will be substantial. And there'll be a better coordination between the or cooperation between the banks, NBFCs, and the fintechs.
Okay, sure. And the last question specifically for you: what are your plans? How do you see iFinance maybe in next 3 to 5 years? What are your future plans? To go, in double digits. Considering what your growth is right now, what are the strategies that you are adopting, and how are you moving forward?
Yeah. We believe that we can grow at a very rapid rate of 40 to 50% at least year on year, and expand our footprint across the country. We already have close to 400 branches across India. Those branches in about 3 years' time might be around 600, 700 branches.
Right.
We cover almost 20 states, and I think there are very few states that are left, but we would like to cover all of them. So in 2 years, 3 years time, if you ask me, I would say that we should be almost present in most states, if not all states in India. We would have more branches. Our growth, as I mentioned, should be around 40 to 50% CAGR. And beyond that, I think we should have happy customers. We should continue to have happy customers.
I'm sure.
And hopefully have strong relationships with banks in terms of co-lending, probably strong relationships with some fintechs which want to play in the inclusion space. With fintechs, I think most of the fintechs are still working on spaces which are less penetrated, not excluded completely.
Okay.
So, you will look at them giving loans to salaried customers who are not really aggressively targeted by banks, etc. But I think in coming years, you'll see more and more fintech getting into absolutely the excluded space, which could be agri or it could be micro enterprises like we do.
Right.
So I think we believe that that we'll have some competition in those coming 2 or 3 years, and we should be able to hold our own stead in those years.
No plans of listing?
Listing is one of the things that we would consider. It's a company that has been funded by private equity, so they have to be given exit and a good exit. So I think I would say that in 2 years' time, we would be a large enough company which could say that we have a scale enough or a market cap large enough to list. So listing is not in the next 2 years, but after that, it could happen depending on the market conditions being good.
Okay. So for next 2 years, you will not focus more on that, but after 2 years, maybe you will think over it. Okay. Meaningful thoughts, Sanjay. Thank you so much for sharing your time and the perspective here at FinTech Diary. And talking a lot about the FinTech and the MBC space. Thank you so much, Sanjay.
Thank you once again.
Thank you. And thank you so much for watching. Stay tuned to etbfsi.com. Thank you.